Welcome to the not even called Sniper Sundays on Sunday the 15th of March. I hope you're all well and had a great weekend. So I hope you're all ready for what looks set to be another very volatile week. We all know that there's this huge volatility in the market, which is great. As mentioned last week, we're seeing some massive, really big moves in the market, and we had a nice trade last week on Aussie dollar, US dollar, and looking to do the same on lots of trades this week. So I'm going to go over obviously what we're going to be paying attention to first, but as I just said, I'm going to look at the economic calendar. So we already know that obviously there's lots of happening every time you look at the TV. I don't know about you guys, but I have like different various news on my phone, not just forex news, but also just like the normal BBC news and so on. And literally every 5 minutes, there's another message coming up about something with coronavirus, something that's happening. It's getting worse in a certain country. Somewhere's on lockdown. Spain's now on lockdown. It's a massive crisis at the moment, and really this is pushing on further. I can see us coming into a recession. And a global recession at that, and I can see that happening within the next couple of months. So things are getting quite bad all across the world. UK at the moment is being affected a little bit more, but we haven't quite got to the stage of other countries. But as I said, what I'm trying to basically say is that we're having fundamentals affect the market at any time throughout the week, or throughout the day. So as always, we obviously know about risk management, but with the current market conditions and climate, you have to have stop losses and risk management. It's always been rule number one, but if you do not use risk reward and management, or risk management and stop losses at the moment, then you are setting yourself for failure, and you're setting yourself up to crash and burn out of this market and blow your money. You could be, for instance, at the moment, which is why we took some profit on that Aussie dollar US dollar trade last week, even though it continued to drop. In this type of climate, you could be 300 pips in profit, and then you could turn around and be down to 100 pips or down to break even. That's the way that this market is moving. So you have to be very vigilant and very controlled in what you do. There's big moves now, so you don't have to risk high amounts. You can see here we had 250 pip move on Aussie dollar US dollar in 1 day last week, so you don't have to over leverage. We're having big moves, so small 1% moves gaining 5% profit. Big moves like this happening in the market means we can really stack up our profits over the coming weeks. So you don't need to be risking and over leveraging, doing 3, 4, 5, 10% risk per trade or even more. Just keep it to the 1%. Only risk 1% on each trade, and then when the trades pull off, we're having big moves, so we have big returns. So as I said, we know that the news of coronavirus can affect the market at any time, anywhere. So we have to be vigilant. Anything can happen at any time. But then we also have the normal scheduled events on the economic calendar. Now, I'll just quickly go to New Zealand dollar pairs and Aussie dollar pairs. So New Zealand dollar pairs, Aussie dollar, New Zealand dollar are the highlights of the week coming up. I really think that we're going to see big changes on NZD USD and Aussie dollar US dollar. Remember, I always said that we're looking at the push down on this, but Aussie dollar, I see a big long-term swing trades on this and on NZD USD. Now, NZD USD, I had been analyzing this. I see price coming down. We can see we're quite bearish. I'm going to come to this in more detail in a minute. You can see we're very bearish at the moment. So I expect to see this extend its losses down towards the 0.5900 level here. You can see here big monthly support level, because once you break that, then it's sort of free fall all the way down. Obviously, we can duplicate these monthly levels, but if you look at previous price action, we're down at 55, we're down at 48. Big drops. So I'm expecting to see price find some support at these levels. However, now I've been looking at this, so basically what I've been looking for coming into this week is for this to extend the push down, and then we'll be looking for long trades up. We might even look at taking that short trade down. That's what I was originally thinking. However, similar situation with Aussie dollar, US dollar. I'll get to this in a minute. However, let's have a look. We had New Zealand dollar news. let's have a look here. The NZ, sorry, Reserve Bank of New Zealand, they had their official cash rate, which was previous 1%, has been cut down to 0.25% Sunday evening, 7 p.m. So this has happened now, and we got the rate statement that is out. So they've cut their interest. They have cut their rates by 0.75%. This is sorry, I didn't mean to do that. This is going to have a big impact on the market on market open, which again is why we don't hold trades over the weekend at the moment, because as I said, you could be. We saw last weekend, guys, and this is why, again, I know it's hard to be patient. Some of you guys have messaged me and actually said well done on how patient we were on Friday, especially with some trades that we're looking at. But this is why, because imagine you had a Euro NZD trade on Friday, Euro NZD trade, or a New Zealand dollar US dollar trade. There is no telling what is going to happen right now on the market open. There could be a big spike on New Zealand dollar pairs. So we have to wait and see. But now it's a risk, it's a gamble now if you had a New Zealand dollar trade. But so we're going to see a big move on New Zealand dollar, so we'll come back to that. Next week we've got some news. China, we have a G7 meeting due to discuss the measures to deal with the economic impact of the coronavirus. So I'm sure that there would be lots of sort of details being leaked out, what might be getting said, and what that is the actual outcome of this meeting, which is going to affect the market. Tuesday, then we got some Aussie dollar news, some German news, some US dollar news, retail sales, and so on. We'll see. These might be okay, but as time gets on, I think each country is going to get worse because places are in lockdown. Things are not going very well. People can't go to work. People can't do things, and everything's being hit. Car manufacturing, airlines. People can't work, all the holiday and tourism, which is huge in every single country. People are being affected by that, and it's just trickling all the way down the line, and people are really starting to panic. And I said, there's a lot of people that can't work, have to self-isolate. So at the moment, some of these retail sales may come in not too bad, but as the months carry on, you're going to see these getting worse. But every country's getting worse as well. So there's going to be a lot of movement, a lot of volatility over the next few weeks, and few months. So being a trader is going to be a time for us to shine, because it's just the fact that there's no real better job than a forex trader right now. Everything could come to a standstill. All types of jobs, properties could come to a standstill at the moment because you can't. There's no materials being delivered from other countries. You can't go into people's houses, or men can't be on site working. Hotels might have to shut down. Everything might have to draw to a close. So yeah, it's going to be a topsy-turvy kind of a couple of weeks. But the only thing that with forex, we can make money on whichever way the market moves, up or down, and sometimes even sideways. So at the moment with forex, we can sit here and we can trade. So it's one of the best jobs in the world right now, where we can actually sit in front of a computer inside a house, not have to be outside, in different countries around the world, and you can actually literally just be in front of your computer and trade and make money. So it's literally one of the best jobs there possibly is in the world right now. So what I'm basically saying again is, over the next coming weeks and coming months, it's the best job, because not only is it like what I just explained, but also the fact that there's going to be so much volatility for us to literally jump on and take advantage of. So we've seen a little bit of over the last couple of weeks. We had a nice trade last week, but if this continues, we could be having a very, very, very profitable March, April, May if this continues. March, like you said, from one trade we had 5%. It could get it could really start stacking up. And as you can see, we had, with that one trade on Aussie dollar US dollar, gaining 5%, made up for the minus 1% in February, which is now completely obliterated any loss. So let's just start looking through the charts. US dollar index, we saw here weekly, we had a massive weekly bullish candle here, big reversal, just like I envisioned on last Sniper Sundays. Said we're going to extend that push down, and then from that push down we're going to see this pull back up. Calling this out time and time again, just the Sniper Sundays alone, every single Sunday is calling out these moves before they happen. So obviously you can take advantage of them yourselves and also take advantage of them with the trades given. Now, the analysis here, we can see here we come back up to the 78.6% retracement level here. However, we are very bullish right now. So just because we've hit a fib level doesn't mean it's time to look at taking a short trade. At the moment, we could possibly pushing up. You can see here we just sort of rejected this previous support over here, smash through, push back up. We could come back up here now, retest this previous resistance, and maybe even come up and tap that 100.50 level, which we never really managed to get up to before when we had that sharp sell-off. So we could be pushing back up towards those levels. It'd be quite interesting. I do think that the US dollar can extend this push on market open, a little bit like how we extended the push on market open last week. I think we can keep pushing up. It really had the wind in its sails on Friday when it was really pushing hard on Friday. You can see here, just again as explained on Thursday, we had this move here. We came up to here, but explained that I did not expect this to start pushing down, and which is why I wanted to hold the Aussie dollar US dollar short trade. But as I said, because of the current market situations, we have to make bank, we have to take some profit off the table and not leave any risk. So here, as I said, this was just a sort of a correction, a little bit of a pullback before pushing up. We've broken above here. You can see we got this level of resistance, broke up above, retesting, and I expect this now on market open to help start pushing up higher. Now with that is Euro USD. So Euro USD, we're watching this on I was watching this all last week excuse me, and looking for a nice risk reward trade to take a short trade up around these levels. Started pushing down, making lower lows, lower highs, and then what we had here, what I was watching out for on Friday was that spike that we saw higher on the US dollar index here, and as explained, I expected to see the push up, so I expected to see this push down. Now, for learning purposes, this is, I explained this last week, when we see a spike like that, down like this, most retail traders will think that this is finding a bottom and will now start to push up. However, again, remember what I said about pushing your foot down or in the deep end of a pool, you'll find a support. So you need to sort of now come down and confirm that as support to push off. However, with this, the way that how bearish this has been, I still think we can push through here and break down to hit this 1.100 level, which is why I also think that the US dollar can extend up and push up higher to help Euro USD push down. I think here is forming like a sort of a fake double bottom here to try and bring in some long buyers. At the end of last week, we saw this push down, and the bears are in control here because we were looking for a short trade on this. And what I wanted to see last week, we were looking, if you remember last week, I highlighted the range tool here and explained that we probably just bounce around within this level, and then we'd roll over to the downside. So I called that on Thursday evening. But what I was actually looking for first was to come up here and tap that level and then have a push to the downside. So at these levels, when we had a bit of a doji and a push back up, it did look like we could possibly come up here. And what we were ideally looking for was a short trade from this level down. But down here, the risk reward wasn't so good. You can see here from around these levels, the risk reward wasn't so great. However, as I said, I do think that this is going to extend this push down, come down to this sort of level 1.100, and we may even break below that. So what I think that the market will do is bring in some more short sellers on Euro US dollar. However, long-term market bias, as I said, I was calling this as the bottom of Euro US dollar for quite some time, and unless something drastically changes, I think that this will continue to push down lower. We may try and bring in some short sellers where people think that this is a full-blown reversal and start pushing back down to the downside. However, I do still see this as being bullish and seeing this as pushing to the upside. Remember, we did close above that weekly resistance level here. So that's now confirmed. We've broken this lower high. So we're having this big retracement. We've now retraced it back to this 61.8% retracement level, as you can see here, or near enough. We haven't actually quite tapped it just yet, which again is why I think that we can still see another little nudge to the downside just yet, before we see any reversal on this. So what I'm expecting is to see Euro USD push down into this region. I think we could dip down to the 78.6% retracement level, bring in short sellers as liquidity before we see a reversal back up to the upside, and then once we get up there, we break back above 1.1500 and hold this all the way up. So remember, we've had this really strong euro bulls. However, we've had a bit of a retracement. If we just look back at this daily, on the daily, you can see how strong this was. Or even on a weekly. Let's have a look. The weekly will give this a bit more better indication of what I mean. Is we can see how strong these two bullish weeks were. So we're having a correction. We're having a pullback, which you have to expect in order to go higher. So we're having a correction now. We can come back, find support in this level, especially this weekly 1.100 would be perfect. Find some support there, then we could, the second wave of bulls coming in to take this higher, could take this higher quite fast. So that's the setup I'm looking for there. Euro GBP. So Euro GBP, I was waiting on this one last week. I had a few pushes down, tricking people into taking short trades, the eager traders that were trying to look at taking a short from the top, but we were just waiting. We knew it was Friday afternoon, we weren't going to get manipulated. So you had a push down, a second push down, big red candle at one point, spiked all the way back up, push back down, you see this 3-pin pattern, and now we push back up. Something I want to bring us back to, I think we took a short trade on this in the community, and this is why I remember it so well. I actually look back to this level here in August. So remember I mentioned last week that in May or June we kept pushing up high, of Euro GBP, and then we came up to the top here. I remember watching this, and I remember this pair because it was on a Friday. My memory serves me well. This was a Friday. August the 9th would be a Friday. I'm betting, because I remember watching this, and this broke up above resistance 0.900, kept pushing, had this wedge. That's why I formed the wedge on Euro GBP last week, because I remember I said that it likes to play out to these wedges, but also understanding that the market wants to keep trying to push, and then on Friday we had this big solid push back up, bullish day, and then on a Monday we had this doji candle. Tuesday fell down, and then we continued this push down, and a huge push down. I think, yeah, this was the trade that we took, and we hit 1,000 pips on this. That obviously, that's why I remember it so well. Yes, I remember this. We didn't take it at the very, very top. I remember giving this trade out here around, I can't actually remember the figure, but we gave out this trade back in August, and we came all the way down and hit 1,000 pips on this. So similar situation here. What we can see on the rising wedge formation is you can see here that we're pushing up. Friday evening, big push up. We've hit this 0.9050. Now let's not get excited. I'm not saying we're going to have 1,000 pip trade from here, but I'm not saying we're not either. But I'm just showing that we've had this push up. Again, it's what about the market likes to do. Remember how I called exactly what the market done on Euro USD on non-farm payroll. I remember on last week I said that we'd see a fall on Tuesday or Wednesday, and then that's what we saw. We saw a push up on the Monday, then the Tuesday we saw the push down, then we had a pullback like explained, and we pushed down and pushed down. So it's understanding that the market and the market's tricks that it likes to do. So let's see if this plays out. So we'll be watching here on Monday, possibly a doji candle, might extend up a little bit higher, but yeah, I'm definitely very keen and watching Euro GBP very carefully around these levels. Now pound fell through the floor on Friday, so that's one of the reasons this pushed up, so we'll get to that shortly. Euro AUD, these are a bit more tricky now. So Euro AUD obviously is affected by the New Zealand dollar as well. We know that news came out with the New Zealand dollar cutting the interest rates by 0.75%. So there really is no telling what could happen on this market open and how it's going to be received. However, we do know at the moment, just by looking at this chart, we have this high here. It seemed on market open that we could never get back to that high, that it seemed so far away, but that just shows, like I explained last week, always expect the unexpected. And with trading, if you can sometimes look at the chart and just think, where can you not envision this going? A lot of the time, that's where it can go. If you think, no, that's too far away, or that trend line, it won't reach that. A lot of the time, keep those trend lines on. Over time, it will get there. Here, as I said, a lot of people would be looking at taking short trades here, caught in short trades after this big spike. See this pushing down, jumped in short trades. Then when we had this little movement all week, saw a little push to the upside or push back down, jumping in trades. But this was all just toying, playing, and creating liquidity and accumulation. All of this was just accumulation up until Thursday, where we had the move and then we've been choppy ever since. So we're now up at 1.800. Was looking at this last week, thought possibly we might see a bit of a retracement level from here on the Fibonacci, but this is now gone too far for a retracement and looks like we could be creating a double top. Now, however, I have been calling that I'm looking for short trades on Euro AED. I do like short trades on Euro AED, GBP AED, Euro NZD and GBP NZD all come in big swing trades. However, we've seen that further push down on New Zealand dollar pairs, and I hope that now with this we don't have a huge spike to the downside. It doesn't enable us to get in with the news overnight, but we'll see what happens. But I am still looking for Euro AED and will be looking for short trade opportunities. However, right now we are still making higher highs, higher lows, higher highs. And while we're above the weekly support level 1.7750, I think we could still come back down into these levels, unless if we don't have this a big jump on market open and pairs follow technicals. I think we can still have another push up here, and then up here is where would be a really nice interesting level for us to look out for, possibly taking short trades. Euro NZD, as I said, similar situation, jumping around all last week within this little area. I do think that we can come up. Again, we're making higher highs, higher lows, higher highs. I'm expecting us to come up and tap this week monthly resistance of 1.8500. However, as I said, with the New Zealand dollar cutting their interest rates, we don't really know how the market's going to respect that or how it's going to open up. So let's have to come back and look at those on. We have to come back and look at those on market open. Euro JPY is a pair I've been looking at. Euro JPY, I've kept this quite clean. You can see here we've got this really big sort of daily double top, which is also a weekly, sorry, not double top, double bottom, a weekly double bottom. You can see here we came back down, rejected it sharply this week and pushed all the way back up. Now remember from what we learned from anyone who got stopped out on the Aussie dollar US dollar trade, as I said, just understanding price action that little bit better now will pay dividends over the rest of your trading career, because now that you'll understand that after a candlestick there's always going to be that slight retracement. If you gain an extra 2, 5, 10 pips on every pair that you now trade, imagine how much that's going to pay in long term. So what I'm getting at here is weekly we've had this really bullish candle. We've seen a big rejection. We've seen here on a lower time frame we've got a double bottom as well on the daily, 1, 2, and you can also see here if we look at this Fibonacci on the daily, we've had A, B, C retracement, rejecting the 78.6, and we're now about to hit this the first extension on the Fibonacci. So if we extend this push up higher on market open, then what I think we can see next is then to form the next Fibonacci. I can see a pullback on this, because obviously, as I said, on the weekly we can see this big, we can expect a retracement on this candle, and on the daily we can expect a retracement on this daily candle. So I'm going to be watching out for Euro JPY, see how it opens up, for it to reject this sort of trend line coming across the top. We get rid of that. You can see this trend line here, have a pullback to this maybe 38, 50, 61. Could possibly even take the trade on that, but you can see we look quite bullish at the moment, so I'm expecting a pullback here. I'll be watching for a pullback, and then we could possibly see a push back up higher. If I just pull back out here, yeah, we could see we might even come back and retest this broken trend line. You can see here we've had a fake out here, broken back up above this trend line. We could come back, retest that, and then continue. GBP USD. So as I said, pound fell through the floor really on Friday, massive, or all week really. We have a look at this pound. Nearly 1,000 pips, not quite there, but you see a big, well, not far off, nearly 1,000 pip move, weekly candle. But obviously we don't want to be buying against that at the moment, but however I do think that we're coming into a region where we could possibly pitter out maybe this week and see a bit of consolidation and see a bit of a pullback. Now regardless, we know that with a candle like this, like I just said, we can expect there to be some sort of a rejection, so not rejection, retracement, before it continues down, if it was going to continue down. So we can expect to come back up and retest one of these broken support levels, 1.25, can even come all the way back up to 1.27. It's so volatile, we could see moves like that in the market. So as I said, it might seem a bit too far away, But as I said a little while ago, that you have to look at these things and think, where do you think the market may not be able to go? A lot of the time, you have to expect the unexpected. So here you can see, if we go back to weekly, this is a strong support down here, right down at the low at 1.20. This weekly support. We pulled all the way back down now. We're touching this 78.6 and this 1.2250 level on the weekly. So it's something to bear in mind and to have a look at. So I'll be watching out for this on market open. I'd be quite interested. I think we could possibly see this extend its push down on market open, with the US dollar to keep extending its push as well. And this could even come back down to the 1.220. So there's a few options here, but again, I'll be watching this on market open and see how the US dollar is going to behave. I do think that there's a good chance of this possibly slowing down here, and we could have a nice little retracement. We need to come back up, retest some of these resistance levels. You can see here, big drop down, found support, pushed up slightly. See this retracement on this big bearish candle, see this slight retracement, then bang, we drop down. We just drop down to the 4 hour. You can see here, there's a small retracement, then bang, bears took over, come down. So I think we could do the same here, find some support here, and then we can find a bit of a retracement from here. Whether how large that be or how big that be, we'll have to see, and then we'll see how the rest of the week plays out. But like last week, I expect to extend maybe the pushes lower on market open, with US dollar gaining, continuing to gain some strength. Now, with the pound falling for GBP USD really falling last week, we didn't see the same effect on GBP JPY. Obviously, Japanese yen is helping was helping push this back up, and yeah, we didn't have the same effect with the GBP USD. Obviously, the US dollar helping push that down, and the Japanese yen not having the same effect and being able to push this down as low. So we had this level sort of highlighted out. We came back up here on Friday. This was inviting for shorts here, but then we had this 4 hour candle spike back up, didn't look as good, and then we sort of just ranged in here, and we're struggling to break 132.50. So at the moment, again, if we can watch pound, and pound does find some support around these levels and does see a retracement, I think GBP JPY could see a little push up from these levels. You can see here we've sort of got an inverse head and shoulders on the 4 hour chart. You see here sort of left shoulder, head coming back down, retesting as a right shoulder. So we may see a nice little push up from here. I'll be watching this on market open and early in the week for a little push up on GBP JPY. GBP AUD, as I say, this can be affected by on market open from the New Zealand dollar news. We'll have to see. GBP NZD and GBP AUD following quite similar, not obviously exactly, but quite similar. We can see here we've had quite a big range on GBP NZD or GBP AUD, but it's a range nevertheless. And you can see here we've really just been bouncing around here, and at any time this could break up and can come back up higher to retest these highs. Now, like Euro AUD, Euro NZD, I am expecting some big downside on these pairs, and that's because I'm expecting Aussie dollar and New Zealand dollar bulls to step in. That's what I've been expecting for quite some time. With the New Zealand dollar interest rates being cut, possibly that might happen this week straight away. As soon as the market opens, we might see that it helps gain some strength on the New Zealand dollar, and we'll have to see. But what I've been expecting is Aussie dollar and New Zealand dollar to weaken off at the start of the week, which would mean I was expecting GBP AUD to weaken or push up higher with the Aussie dollar weakening and come up into this sort of 2.0500 level, and really just maybe come up to give a better test towards this spike that we had last week, coming up to maybe 78% retracement level. So I'm expecting, maybe we could still just play around at the bottom of this zone on GBP pairs and GBP AUD at the start of the week, but I'm still looking for a little bit of a retracement and a push back up on pound pairs. So GBP USD to possibly push back up Monday, Tuesday to play around here, or Monday play around there, Tuesday bounce back up. GBP JPY, GBP AUD to possibly push up here before then having that big sell-off from here, which will be a beautiful trade. If we can get that up to that level, risk reward would be great as well. And GBP NZD, as I said, funny old day last week. Big daily candle, bearish candle finished on the daily. However, on the 4 hour, we can see here it wasn't quite clear as that. We had a push up, we had a bearish candle down, bullish candle back up, and a bearish candle back down. Now, as I said, I'm not even going to really analyze this. We've got that NZD news coming out, which can see a big change. We do have this level up around here, where we've got the previous spike up around these levels. So possibly we could see price come back up into that level first. So that's what I'll be watching out for. USD CAD, very, very interesting coming into this week. Watching this one very, very carefully. We continue to push higher and push higher and push higher. However, then on Friday, finally printed a bearish candle with a daily sort of, not bearish engulfing, but a bearish candle here. 4 hour, we could see that we kept pushing up with this rising wedge. We had this rising wedge formation. This is the third touch, broke up to the upside, then came down, continued up higher. Didn't quite come up to tap it again for the third time here. Came very, very close though. However, 4 hour bearish engulfing coming into play and now showing some signs that the bears could start to take over. Here we have 4 hour double top, 1, 2, 4 hour bearish engulfing, daily bearish candle, drop down to the 1 hour, and we're starting to see quite nice bearish candles come in here as well. So what we'll be watching out for, again, on the 4 hour bearish engulfing, as explained last week, what we can expect is to at least see a bit of a retracement on that candle in order to then push down. But what I would like to see here is, because I think we're going to have a bit of playing around on Monday as normal, is I'd like to see price come up into this region and perhaps reject this sort of head and shoulders formation. Really show us, give us a pattern, show us some more signs that it's ready to hold, and if it does, then we could be looking at a trade. We're trading below 1.400. There is still the opportunity that we could come up and tap that, as we are making higher highs, higher lows, and could go on to make a higher high. This was the last candle on a Friday. I don't like to analyze off them too much, because Friday afternoons can be highly manipulated, and we see some strange moves on Friday evenings. USD JPY, big push up last week, and similar to Euro JPY, I'm expecting a pullback down on these pairs, possibly to 10600, possibly a little bit lower to 10400, and then longer term I'm looking for a push back up. We can see here USD JPY, we're starting to create a trend here now, high high, high low, high high. If we come back down into these levels, would be great. But again, I'm expecting US dollar to find some strength at the start of the week, so I'm expecting this to extend its highs slightly. That's why I've highlighted this, to maybe just play around within this level. You can see this 4 hour candle here. If we drop down, we might just bounce around in this level a little bit more, play around. We could be looking at a nice little short trade down here around the middle of the week, before longer term looking for a longer trade back up, aiming back up towards those 110 levels. Aussie dollar, now as I said, this is a trade that I've been looking at for quite some time. We saw the big sort of move that we had a couple of weeks ago from the lows here. We had a big bullish engulfing here. Didn't really give us the opportunity to take an entry. Quite sloppy and choppy around here. But we had a nice bullish week. But then on market open, we had that big spike to the downside. And then on seeing that we had the weakness, we took that short trade. We took that short trade here, rode us all the way down to around this level here, and then took out our profit. So as I said, this is that manipulation. We're trying to bring in long buyers into the market, because it knows that most retail traders are looking at this. Expect to find, oh, now that we've seen a 4 hour pin bar, that means that there's going to be support. Try and bring people in to buy, have a little move up. People think that, or people start buying, and there's just liquidity for the next move down, and then the down. And this is just where, I don't know if you ever heard the saying in the markets, where the pigs get slaughtered or sheep get slaughtered, because the market's just pushing down, and people fighting for their lives trying to buy this, and it's just going to kill them until it's ready to turn around. So here we are, as mentioned last week, one of the reasons we sold this was there was just literally no support to the left. We looked left and there was nothing. Now we are in this strong monthly level here, 0.600, that round significant level. We could just extend down a little bit lower, tap that round significant level, psychological level, and then ping off that, just as we have previously here, 0.1, 0.2, and all of this area we could see a fast rejection and see this literally just take off. After this, then there's the new lows, not new lows, but lows that we haven't levels that we haven't seen since 2002, and then we go down to 2001, and then we got new lows. So at the moment we are quite bearish, but I am expecting some rejection from these levels. Weekly, very, very oversold, and weekly support, so monthly support, weekly support, daily support, is all looking for the bulls now to step in, buy at these cheap prices, buy at these prices that these round significant levels, and take this all the way back up. So yeah, I'm looking for Aussie dollar longs this week. And I'll be watching for NZD longs as well. But around these levels here, I just get rid of this now because we understand where we are. But we have to see how this is going to play out. And you can see here, we've got what 0.6100 just below. But then, as I said, we know we've got, with this moving this fast, we could easily come down and tap this round significant level 0.600 there. From that level there, I'm going to be watching price action, see how we continue to play out, making lower lows, lower highs, lower lows, lower highs, lower lows, and can just roll over to the downside here. We're on a very steep slope down at the moment. And so I'm going to be watching price come into sort of this region. Again, we might even be able to look for a nice intraday short trade just to drop this back down if we see any little bit of a retracement popping back up. But we are very bearish on this right now, and looking for this to come back down into sort of this region. However, as I said, this can all change unfortunately at the moment because of the situation with the market open, with the New Zealand dollar interest rates being cut. Aussie dollar CAD is another one that I'm very interested in. We've been covering this for quite some time. If I just zoom out here on the monthly chart, it's crazy that we're looking at a lot of monthly charts just to look at supports on some pairs. Here we can see this level highlighted, strong area. Remember, this is the monthly now. Strong area, monthly support and resistance, support here, support, area of congestion there, but support here where we pinged off it. So we're coming into this level now, so I'm quite interested coming into this. So I'm just watching price action over the next few days, and we're watching at how things play out around here. But again, Aussie dollar CAD, Aussie dollar US dollar pairs that I'm looking for, big swing trades. New Zealand dollar US dollar, as I mentioned at the start of the video, also looking for longs on this soon as well. But we're coming back down. I'm expecting to come back down and tap this level 0.5900. You can see here it lines up quite nicely with long-term previous support here, big rejection, support around these levels. However, we did hold around 0.6100 where we're currently trading at. So yeah, I'm watching out for this. We've also got here on the monthly chart that we've just broken through this monthly trend line. It's not very often that we use a monthly trend line, very rare in fact. So what we also do is now, just like any trend line strategy, we highlight the breakout candle, which is here, highlight the breakout candle, drop down to the next time frame, which is weekly. And so now what we'll be watching is how price reacts around these levels. If you can sustain above this level and not break below or close below this level, then we could be looking for a really nice longs. We might have a push down at the start of the week, but then close back up above this level. So it's going to be quite interesting. I'm just going to add this on here, and we'll continue to monitor this over the coming days and just seeing how price reacts around the bottom of this weekly support level created, and just seeing how it continues to play around this level over the next few days and over the next week. It could be a really nice indication for us to look at taking that swing trade long. But again, as I said, I think things are going to be quite different. I think we're going to see a gap in price action on market open, whether it be to the upside or to the downside. But I do think there's going to be a gap on market open due to the news. Gold. So gold, massive move on gold. So remember, I've been calling a big sell-off on gold for a long time. But then this coronavirus has helped push this up higher and higher. And we've reached the highs of last week of 1700. So you can see here, anyone who got in on Sunday evening or early Monday morning when it saw 1700 pushing up higher and decided that, okay, this thing is now going to go to the moon and buying at the highs, rest in peace those people, because you can see here that's exactly what the market's done. It's had some manipulation here. Market open on Sunday, pushed up, probably anyone seeing a break of 1700 jumping into trades, not understanding where they are in the market and market structure and when to buy and when to sell. Seeing a push up here, could possibly buy, then we saw a push down, and then it's just literally like I said, any sheeps are getting slaughtered here, and it's just absolutely killed anybody who's looking at taking a long trade. So here, that's why we stayed back. It was a buyer's market for gold, possibly still is. Well, it still is, but I expected a push back down. But as I said, the push down was very, very big towards the end of the week. We were looking for a push back down, remember, back down to around the 1600 levels, where we might look for a trade, but then it pushed way. I think we were actually looking around the 1620, 1630. Then we pushed down to 1600, and the trade was not on. See this spike here, making people hopefuls, people who are hopeful, who may be in a long trade, seeing this spike here, thinking, okay, there's a chance we might push up from here because we've had a spike to the downside. Then what market does is just comes down and takes out that wick, and then it's taken out here again, trying to bring in people in to take long trades, but there's just no sign to take a long trade just yet. I even explained on Thursday that I was expecting price to come back down and sort of test this level here to create an inverse head and shoulder. Again, having patience and waiting for the market to show us some patterns in order to take the trade. However, we came down and broke straight through, so there was no trade. Now, we are at these levels where I do think we could see a turnaround. I was always looking for a big sell-off on gold coming up this year. But obviously the coronavirus and the world situations, the common sense just makes you understand that gold is a safe haven, so you should be looking for long. However, news came out last week that a lot of traders with the stock markets crashing liquidated their assets, liquidated gold, and that's what we saw the big push down. Then we also saw the US dollar, because of that gold push down, we saw the US dollar have this very strong push up. So gold now is coming down to around 1500. This is interesting levels. We've got an area of resistance and support here around 1440, 1450. But I will be watching closely around this 1500 level. You can see here we've got this again. Let me just go up here. We can see that we've got this breakout candle on the daily. So this is going to be quite interesting. So we're going to drop down to the 4 hour and be monitoring how price reacts around here. Again, with the gold, with US dollar extending the push to the start of the week, because everybody then jumps on the trade and then they get caught out. I expect this to maybe push back down and play around with this 1500 level and play around with the bottom of this highlighted zone at the start of the week. And then I expect that we can see that push back up. However, with this push back up, we will be looking for that long, but we'll have to see what happens then and what state the world's in at that time. We're going to be looking for a nice long trade up, but I'm not saying that we're actually going to come back up above 1700 anymore. This is a big push down. We could see a push back up, a big retracement, and then we could see the next move back down on gold. However, as I said, common sense would lead you to believe that obviously gold is the safe haven and we should see new highs. But things are changing on a daily basis. So you have to just take your step back and just think, okay, I know this is what should happen, but what's the charts telling me? Really think about it, and don't just take everything for granted. Everyone's shouting gold buys and gold is a safe haven, and gold going to 1800, gold going to 2000 in the media and so on. And then you see what happens. Market opens, fools people into taking a long trade up at the top, and then bang, it dies. So we have to keep an eye on the charts and what we see in front of us. And what the charts are saying is obviously we've had a big push down. We can expect to see a retracement here now, but here we could come back up to these levels and we could find resistance and we could easily sell off once again, because that was a big bearish move there on a weekly. So we can see a pull back up here and then we'll see what happens. So we can't just, basically we can't think too far ahead right now. There's so many twists in the tail at the moment, so many different things coming out. Even at the start of the year on my Sniper Sundays, I called out, which has played out on most pairs, my short and long term perspective. At the moment, we've still got our short, medium, and sort of long term, but we have to understand the long term can change or the medium can change, because there is a lot of things that can change the market right now. We're in situations that we haven't seen in decades. We're in a worst financial crisis that we've seen in a decade. So everything is sort of up in the air and all over the place. However, that is creating volatility for us, which can create lots and lots of great trades. Last thing I'm going to look at the moment is oil. Oil had we saw the big push down last week. Daily hasn't really done much since, as it sort of tries to understand what's just happened. And we just sort of moved sideways. We created one high, haven't really done much. just moving sideways on the daily chart. 4 hours not really giving us much indication. We'll see what happens on market open. I think we can see a little bit of a pop up here now on oil. It's just starting to see a little bit of a push up very, very slowly. We see here, if I go to a Fibonacci, we see here rejecting the 61.8%, just starting to find a nice little area of support here. So I think we could come back up, fulfill this gap, fill in this gap, maybe even come up a little bit higher than that. But I do think there is a possibility we could see some long trades on oil now. We're going to see how the market opens to start the week, but it's quite looking a bit more interesting and a bit more better for the long or for the bulls on oil. And coming up, and as I said, coming up in sort of this region where we could fulfill this, closing this gap that we had, come back up there, and then we might see a bit of exhaustion. We might see the bears start stepping back in to take it back down. Remember what I said earlier on some of these pairs, we need liquidation in order to move the market. So we need people to start taking long trades in this in order for the next move back down. But yeah, we'll be watching out for this and seeing if that is an opportunity to have a long trade on oil. So that's about it, guys. As I said, busy week on the calendar, busy week because of the coronavirus situation, as we know. So there's lots coming up. I really do see a busy week. It's going to be interesting to see how the market opens. But yeah, I want to get really busy this week and take lots of trades and take advantage of this volatility. We know what's happening. We know what it's about. As I said, if we keep to the 1% risk at all times, we're having big moves in the market, so we can get 2, 3, 4, 5%. Do not be stupid and risk more than 1% on a trade, because we might lose a trade, but then in the next trade we could get 4 or 5%. We could even get 10% the way that this market's moving. We had one 5% trade last week, which was a nice trade to have. But you can see there the risk reward, and also just go back and touch on January being a 10% month, February being the first month we've ever had a loss in the 8 months, in the worst financial crisis that we've had in a decade, and it only being minus 1.5%. And then we have one trade, and then we make 5%, which then makes February laughable and gets back any losses that we had in February. And now we're back in the green and running really well for the first quarter. And then we've got now another nice couple of weeks with huge volatility where we could have multiple 5% trades. So don't be silly and risk more than 1% and damage your account or blow an account. Risk 1%. Because all of these trades, there's so much volatility. We're having a couple of hundred pips in a day on pairs. We can get huge returns for very small risk. This is the time to be trading, but please trade correctly. So have a great evening, guys. Bear that in mind, and I'll talk to you guys on market open, and we'll see how this New Zealand dollar situation and all the rest of the market opens up. Given that we know what happened last week, we could have some surprises in store. So let's see what happens. Speak to you soon, guys. Have a great evening. Thank you.